tell you more today about what we do. And I appreciate, I asked Gary if I could kind of use the example of when I started working with him to kind of explain the process. I've talked about QuickBooks and how we talk about the design and the importance of design for a company. So having it set up correctly from the beginning. We believe that the purpose of a financial statement is to manage your business. A lot of people kind of look at the financials, well, you do that to have numbers to do a tax return at the end of the year. That's the wrong approach. The purpose of a financial statement is to manage your business, and therefore you need to set up to give you the information that you need. And so when I met Gary, actually I started doing Gary's work before B&I, and I'm pleasantly surprised when I came in and he was here. I was referred to him by the gentleman he bought the business from, and I wasn't even his accountant. He wasn't happy with his accountant, and he knew me and referred me. And so when I came in and began talking with Gary, the guy that he purchased the business from had a financial statement that said sales, purchases, and all its general expenses. And that's basically fairly common that you see like that. But that doesn't tell you very much. Sales, well, you know, what category, what kind, where am I doing most of my business? What areas are more profitable? Doesn't give you any of that information. And so when I began talking with Gary, and I said, Gary, what do you want your financial statement to show you? He says, well, he came from San Antonio. He was head over, I think, 5 stores out there. There were Carpet One stores, or I believe the largest franchise of Carpet One in the country. And he says, I'm fairly accustomed to sophisticated financial statements. And I don't know if QuickBooks will do it, but I'd like to see my retail sales. I'd like to see my commercial sales, my cash and carry sales, and of course returns and allowances, freight. So we set up in QuickBooks the income statement, which is really where you kind of look at your business, is free format. It means you can set it up however you want, and so within the conditions of okay income. So we set those categories up of that, and then under cost of sales we set up his material costs, but his cost of sales doesn't only include his carpet, it includes he has to deliver it, he has to install it, so he's got productive labor, he has contract labor, which are his installers, he has commissions on the sales, he's got freight to get the carpet in here, he's got sales tax. So all of those things enter into what his cost of that job is. Then he says, but really within that, I'd like a little better detail of what each of these categories are. So for retail sales, I'd like to know what kind of categories of sales I have. And so if you go to the expanded, in QuickBooks, you can have, that was the condensed version, you can expand it. And so under the expanded, we now have retail sales, and we've got carpet, wood, tile, laminate, sheet vinyl. You can see that all the way down. Same thing for commercial sales, a little more limited for cash and carry. Go on down, Deidre, to the cost of sales. So we can break down those sales not only by major category, but we can get very specific with what kind of sales he has. So he can now look at his financial statement at the end of a month, at the end of the quarter, the year, and he can know where his major sales are coming from. Maybe an area he wants to emphasize more when he looks at his profitability. What are you going to sell more of? You're going to sell more of that which you're making the most money on. So he can look at that, he can see where it's coming from, it can help him with his planning, it can help him with his advertising. Same thing under cost of sales, we want to break down the same thing. So under material costs, we've got all the same categories so that we can actually go out and calculate, okay, what is my percentage cost for carpeting? What is my percentage cost for tile or for wood or for laminate? And so having that information broken down provides the ability to make those kinds of determinations and those kinds of decisions. It's important enough under cost of sales that all of your variable costs are included. And variable costs are those costs that fluctuate proportionately to sales. If my sales double, those costs I would expect to double. And so when I'm analyzing my financial statement, I'm going to look at the percentage of cost of sales to see if that's remaining consistent or constant. How much time do I have?
4 minutes.
Okay, 4 minutes. So I want to make sure that that's consistent and that's constant. Slide on down, Deidre, to gross profit. Okay, so we come down. My sales less my cost of sales gives me my gross profit. And we generally look at gross profit as a percentage because of that factor. Then I have under that, I have my general expenses. Now, general expenses, advertising, bank charges, depreciation, rent, utilities, telephone, things of that nature. General expenses are generally considered to be fixed. And so that means that they typically don't change dramatically. You know, if you've got a bookkeeper, you've got a bookkeeper. Now, if you have ultimately grow so much you have to add a second bookkeeper, then you get a jump in it, but then it'll stay constant again. So they're generally fixed in nature. And so when you're analyzing and looking at general expenses, you want to look at the dollars. You don't look at the percentage, because my sales could double, but my fixed expense should remain relatively the same. So I don't look at percentages. I look at the dollars. So if my overhead is $20,000 a month, next month when I look at my fixed expenses, I want to look at it and see, hey, it's, it's $19,500, whatever. It's consistent. If I looked at it, it was 30 grand, then what am I going to want to do? I'm going to want to start looking at individual expenses to try to determine why I had that increase in cost, okay? I can take my total general expenses for a month or for a year, and if I divide that by my gross profit, it gives me my break even. And so I now know how much sales I have to have on a monthly basis or on an annual basis to break even. And anything above that then begins throwing profit to the bottom line. So I can utilize that for purposes. If I take my gross profit percentage and I take my expense, I can use it for planning purposes. I want to add an expense. But how much sales do I need to increase to be able to cover that expense? So if I take the expense that I want to add, divided by my gross profit percentage, it tells me how much sales I need to cover that, okay? So we had all this set up for Gary, working well. He gets timely financial statements that are accurate and he can use to manage his business with. Recently, or right now actually, he's in the process of setting up a store in the Villages. And so he says, okay, I want the same information, but I don't want it all lumped in with Ocala, because I want to be able to look at Ocala and I want to be able to look at the Villages. In QuickBooks, you have what's called classes. I would call them divisions. And so flip to that, Deidre. And I think Deidre is one of our employees here helping me. And so you can see up there, store 1, store 2, store 3, overhead, and then unclassified. Ignore the unclassified. But basically, we can take that format, and he can have as many stores as he wants. He can have the Villages, he could go to Crystal River, he could go to Daytona, Gainesville, whatever, and we just keep adding columns. So we can generate a financial statement for him that gives him a P&L, profit and loss statement, for each and every location. And so he can manage it. If he has a manager there and wants to give him a commission for profit, he can do that. Now you'll notice the overhead category. When you go to individual stores, those stores have some specific costs that relate to them. Sales, cost of sales, generally personnel, rent, utilities. Those are all direct expenses related to that store. They would go in that particular column. But then you have some overhead costs. You have the owner's salary. You have the bookkeeper's salary. You have maybe advertising that's done for all the stores together. So what we do in that case when we have multiple stores is we put that cost in the overhead column, and then at the end of each month we take the total overhead for the month and we apply it back to the locations. Now generally we'll do that on gross sales, under the theory that if one has 2/3 of the sales and one has 1/3 of the sales, that's probably what they're utilizing of the overhead. And so we take that overhead each month, we apply it back to the divisions, and that shows you what the profitability of each individual store is. That's what I'm talking about when I'm talking about designing the financial statement to manage your business. A lot of things, huh? 1 minute. Okay, a lot of things you can do with that. This is what we've done with Gary. We've utilized it for law firms and doctors. A lot of your law firms and doctors work under the theory of you eat what you kill, meaning that they get a certain percentage of the work they do. So we've had practices where we'll have 4 partners. We have 4 partners set up. And we're breaking their revenue and their costs down, and then we're allocating overhead back to them. Or we've had 4 doctors, and we set up their performance, and we allocate costs back to them. A lot of things that you can do with the financial statements. It's just a matter of talking to the client, getting to know what they want to be able to analyze their business. So generally the first question I ask a client when I meet them is, what do you want to see? What do you want to understand about your business? We can help you do that. Call your journey to God, certified public accountant.